This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, July 14th. Starting out with the stock index futures, we did see some pressure developing when retail sales came in weaker than expected, coming in down 0.3%. That compares to the estimate of up 0.3%. But futures then recovering and trading higher on ideas that anything that slows the economy or suggests a weaker economy implies that the Fed may be forced to delay a rate increase. So with that logic in mind, stock index futures were able to move from a little bit lower on the day to higher on the day. Also, we do have the geopolitical problems being alleviated in recent days from the Greek situation, the Chinese stock market decline, and now the Iranian nuke deal, all of which had been negatives to one degree or another for stock indices, all now apparently showing a better tone, which is bullish for stock index futures. So longer term, I think we can see the bull market resume now. Also, it is very likely, according to my analysis, that we will see some new historical highs for the S&P and the Dow. I'm going to give myself a lot of time later this year, maybe sooner than at the end of the year, but the main trend is higher, and we are looking for new historical highs in the major indices. Now, moving over to the foreign currencies, with the geopolitical problems being alleviated for the most part, we are seeing the dollar index coming under some pressure, and we do feel that that is the main trend. The main trend is lower for the dollar index with what we're seeing. We do feel that the Fed will not be able to raise interest rates anytime soon, and if that proves to be the case, that is all the more bearish for the dollar index. By the same token, better economic numbers out of the Eurozone supporting the euro currency today. Also, we had less deflationary pressures in Switzerland in a report today, and that helped the Swiss franc to advance sharply. Also, the Bank of England governor indicating that the time frame for a rate increase in the UK is coming more near, and that helped the British pound to advance. Also, the Australian dollar gaining after the report showing business confidence in Australia coming in at almost a 2-year high. So longer term, I'm thinking that the commodity currencies will do well, especially the Canadian dollar. We even had the Canadian holding up very well, even though crude oil was lower this morning. So I think most of the negatives are fully factored into the low price currently for the Canadian dollar, and I think that is the best long, while the US dollar remains the best short. Now, moving over into the interest rate markets, some pressure developing in the overnight trade with the flight to quality longs being liquidated in light of these geopolitical problems being alleviated to one degree or another, but some gains coming back in, especially at the long end with the retail sales coming in on the weak side. Also, we had a couple of other lesser reports showing economic weakness. However, we do feel that the longer-term trend is lower for the long end, the 10 and 30-year issues, especially the 30-year. And I would not be surprised within the next couple of weeks, maybe the next month or so, to see new lows for the move in the 30-year Treasury bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.